Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's keep up with our euro analysis. So in two previous videos we specified the targets, the overall tendency that we're following, the levels that we're watching, and currently actually there's two important moments that we have till the end of the weeks. First of all, this is the summit in Japan is starting. It really could bring some surprises depending on the results of the negotiations among the major players on the geopolitical arena currently. And the second, the tactical issue, but it also could have and probably will have significant impact on the market. We'll have the very important statistics today and tomorrow. So today we will get gross domestic product release for United States, personal consumption in the gross domestic product. So this is actually one of the important statistics that we have mentioned in our weekly report. We said that the market expectation of the Fed changing policy should pass through the test, and one of these tests is the results of the United States economy in the second quarter. Tomorrow also will be the second part of the statistics, which will be price consumption expenditures index. So monthly data for May. Today we will get the personal consumption expenditures for the quarter. So these two important moments. On the technical point of view, here we do not have a lot of changes, especially on the daily chart. The one thing that we've got is another high wave pattern. So yesterday we talked about this pattern, high wave on the 4-hour time frame chart, but also by the result of the previous session we have the high wave on the daily as well. Currently, market confirms our suggestion that probably retracement will not be too significant, and 1320 area in current circumstances seems a reasonable destination point. So currently, we are watching for retracement right with the, let's call it as a neckline of our and shoulders pattern, taking into consideration strong upside momentum as with this AB leg, as the CD leg. Chances are not really bad that market will proceed higher. Currently, market actually reacts on the strong resistance and agreement area, and that also was daily overbought. Reversal session has been formed, so that's the reason why we suggest that on the intraday charts it should be some kind of the ABCD retracement somewhere to 1322 area. So this is our short-term trading plan. I hope that today, tomorrow probably it should be completed, because actually we're watching for a whole week for the retracement. On the 4-hour time frame chart, let's see what we have. Actually, market is calling around the same first fib support. If you remember, here it's 30% fib support of this upward action. That's the actually ABCD patterns that we are watching for. It creates an agreement with the conference. So why we have chosen the 1320 area. This is weekly pivot point, neckline on the daily, but also it's conference support on the 4-hour time frame chart. So that will create the rock hard support, and taking into consideration that market doesn't show really collapse here. It's very retracement comes difficult, and it's really market feels significant support. So you can see these upward pullbacks. Here is significant candle up. Right now market shows some reaction. So it means that that's probably the level that should hold further downward action. That will be the level where we'll consider chance to go long. Our ultimate wider level is this confluence, because in the current circumstances, as we explained yesterday, market should not break this area. Breaking of this second confluence will put the shadow on the bullish perspective. So this is not normal in the current circumstances. In the previous price behavior that market shows, this will be not normal action if market will break through both confluence areas at once. So that will be negative sign. Now let's see what really has happened. Yes, the retracement that we have expected has happened. You can see market shows this upward action, but here also, guys, we have the minor wash and rinse it's not very important at the first glance, because actually this is not the washing rinse of some top or bottom, but for a high wave pattern, this could be treated as the failure upside breakout. And for the high wave, this washing rinse makes sense, because it could mean that market has chance to continue move lower. So that's important moment here on the 4-hour time frame chart. On the 30-minute chart that we talked about yesterday, picture has changed slightly. So yesterday we discussed this, probably this butterfly could be formed, but market shows retracement, and as we said, this was the washing rinse, and currently we can't take into consideration this butterfly anymore because it has been erased. Still, we have the same ABCD pattern. Our minor XOP from the initial minor ABC tab pattern also has not been completed. Actually, guys, you probably could recognize here some kind of the triangle action, right? And market is forming currently. This is Gartley's triple 2, shows retracement, but potentially it could be the butterfly to complete this ABCD pattern. It's also stand 1320 area. The thing that seems important here on the hourly chart, guys, is this kind of the hidden bearish divergence, and this also probably could be treated as the bearish dynamic pressure. In general, here, as you'll take a look at the MACD indicator, trend shows the bullish direction, upside direction, while market was forming lower tops, and this shows the sign of the bearish dynamic pressure. Taking into consideration that big volatility could come on the market today, I'm not exclude the chance that market will show this downward action. Be careful during the gross domestic product release. Market right now expect 3.1%, so it's very good gross domestic product, and it really could put the shadow on the perspective of the Fed to cut the rate. So recall what we have talked about in the weekly report. Currently, the statistics has really special meaning, and it really could bring the surprises, because I'm sure that Fed knows in advance what numbers will be. So just be careful. Maybe it makes sense to take the position not before the date will release, but after the date will be released, despite in what direction you intend to trade. Only if you trade the particular the statistics release. In this case, you could try to take the risk and trying to trade the statistics release, but in other circumstances you just would like to take the position on some strong level. Be careful during the report. So that's our view on euro. In general, the setup that we have discussed on this week still stands valid. We are watching for a bit deeper retracement, because currently market shows no signs of the upward continuation. Consolidation is forming, and we have some targets just below the market, and we will keep an eye on them. So I hope that they will be completed.